Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ken Shreve here with a breakdown of the action in today's session, Thursday, November 9th, where we did see some selling, but after an 8-day win streak for the Nasdaq, it's the pause or pullback that we were all kind of expecting, Ken.
Yeah, I mean, both the Nasdaq and the S&P 500 up multiple days in a row. So market was, starting to probably look a little overbought, but so we finally got the decline. Now, it did come in higher volume, and it looks like we're going to get a distribution day for a higher volume decline for the Nasdaq and the S&P 500. We'll see what volume looks like in a little bit, but yeah, not such a great day. But I have to say, like we talked about on IBD Live this morning, still a lot of good setups out there. So let's take a look at retail stock TJX companies. TJX is the symbol there. Also Palantir Technologies, a software company. And finally, in the home building group, PulteGroup, PHM.
Okay, we'll take a look at those three stocks. But first, let's analyze the major indexes. The Nasdaq today down 0.9%. The S&P 500 down 0.8%. The Dow off by almost 0.7%. And it was another day of selling in small cap land, with the Russell 2000 down by 1.6% today. We have bond yields to thank for that, perhaps today, Ken, for the decline in equities here.
Yeah, it was really kind of a double whammy on bond yields. Remember, it was either last week or maybe the week before I was out on vacation, but there was a 30-year bond auction not that long ago that was met with very weak demand. And then today there was another 30-year bond auction where people wanted higher yields, and that fueled the selling in the bond market and caused a big spike in interest rates. So right when we were getting comfortable with rates coming down and the market rallying, we had, I think at last check, that 10-year yield was up about 12 or 13 basis points today. Yeah, and it's testing support right at the 50-day moving average here. So yeah, the market showed today that is still concerned about higher rates. So you had this weak demand from the 30-year bond auction, and then you had a little speech from Jerome Powell, which not really sure he said anything new, but he did insinuate that he wasn't really sure that the Fed has fully done its job yet when it comes to fighting inflation. So people took that to mean, well, maybe they're still going to hike rates, and he's basically said that they're data dependent at this point. It's possible there'll be another rate hike. The market doesn't seem to think that's the case, but yeah, so it was sort of a double whammy today for the market. But yeah, it was in need of a pullback. We still have indexes holding above support levels here, so I think it's too early to throw in the towel yet.
Yeah. Okay. Let's take one more look at the Nasdaq, because also in terms of this pullback, if we do see the Nasdaq come in more, it seems like, we'd want it to hold above the 50-day line. Is that too tall of an order here?
It might be. I mentioned on IBD Live this morning that ideally we just get a little low volume pullback to the 50-day here. We got, you can see volume today definitely is going to be higher. So, one distribution day is not going to kill a rally, but if there is a test of the 50-day moving average here, hopefully the Nasdaq will find support. But the bond market's going to do what the bond market's going to do, and if people continue to sell bonds like they did today, and that causes upward pressure on rates, that is probably going to keep the market honest. You can see a couple of support levels below the 50-day line for the Nasdaq, but let's see and wait and see what a possible test of the 50-day line looks like. It's possible the market has been acting strong enough that it could end up being a support level here.
Okay. And now let's take a look at the S&P 500. It's right at its 50-day line.
Yeah,
so
very close.
Yeah.
Very close to a test here. So I think tomorrow, Friday, tends to be a low volume day. I know it's not time for options to expire yet, so we'll see what tomorrow brings. But you can see the S&P 500 much closer to the 50-day line than the Nasdaq at this point.
Let's look at the Dow blue chips here, coming right at those converging moving averages, the 50-day and the 200-day. A couple of tight days right around 34,000 and poking back below that level. So the other thing, Ken, which I feel like you mentioned, but maybe just worth reiterating, is the fact that now that we've seen leading stocks running over the past however many days, this could be constructive to see a pullback. result in the formation of handles and new setups for stocks that have been running.
No question about it. And like I said, I think investors should really be squarely focused on still the number of nice technical setups out there that are there in individual stocks. So yeah, I think that there are still reasons to be optimistic here that we can get a nice little year-end rally. It may or may not pan out, but underneath the surface, even though we've been complaining about weak breadth, and it was about 3-1, close to 3-1 negative today on both exchanges. Well, you can see that in just the violent selling in the Russell 2000. Some market pundits are really concerned about this and say it doesn't bode well for continued strength in the market. They may be right, but certainly the weakness in small caps has been a sight to behold.
Yeah, I mean, a big week last week, up an outsized 7.6%, but an outsized down week this week taking shape, giving back
Yeah,
more than
and,
half of that as
and
of now.
getting turned away right at that down sloping 10-day moving average. So it
Right.
tends to be a resistance level during downtrends, and we're seeing that play out with the Russell.
Right. So I don't know. Maybe it's just me. I wouldn't want to be shorting the Nasdaq here. It seems like if you were going to short something, maybe yesterday, seeing the Russell really start getting rejected at the 10-week could have been an opportunity. But what are your thoughts on this potentially being the early stages of the next leg higher in the early days of a bull market, or we're just going to keep getting chopped around? We've been, up and down in a channel basically since July, at least for the Nasdaq. Is this just going to be a continuation of the chop?
Wouldn't be surprised to see some volatility. We definitely saw it today. That's sort of how the market's been working lately. But listen, it's a market that is still really being dictated by interest rates. We had this bullish win streak starting with the major stock indexes when that 10-year Treasury yield was precipitously falling. So but again, I think when you look below the surface, there are at least right now there are very few broken charts out there. In fact, today's session served up so many technical breakouts. It was kind of hard to keep track of them all. So many on earnings, but yeah, with this 10-year yield, this is the just kind of holding support here, and we'll see after that big drop last week. So we'll see where rates go. The Fed, again. Jay Powell is they're data dependent, and we have CPI data next week, and I don't think that the Fed certainly is in no rush to raise rates again, but they're just going to see what incoming data looks like, and they want to get that inflation back down to 2%.
Sounds like a plan. Well, let's take a look at some stocks underneath the surface today. Let's start with TJX, a couple of quiet days, and now trying to use that 90 area as a launching pad. Earnings in 6 days. So this one's still very much in setup mode, it seems, Ken, with a gain of 0.7% today. But constructive action, no doubt here.
Yeah, when they reported earnings at the or for their July ended quarter, you can see growth accelerated from the prior quarter. You had 23% bottom line growth, 8% top line growth. So it's not really showing the growth that we typically like to see. But here again, the TJX is a company with a market cap north of 100 billion. So I would say fundamentals are still very much intact. 3 months ago, when they reported earnings, this is a company that we're talking about how a lot of higher end retailers have been offloading a lot of merchandise coming to TJX stores, and that's been fueling nice growth. So wouldn't be surprised to see strong numbers next week again. And this is a good technical setup. I mean, make no mistake, this is a bullish chart. You had that recent move above the 50-day moving average. And then you have like 4 or 5 days in a row of pretty tight trading. And when the market was down pretty good today, TJX was actually up close to 1%, and volume was pretty good. So I like the setup here. Ross Stores, a competitor, also reports next week and is in a very similar setup as well.
Yeah, we're going to get a lot of retail earnings start
Yeah,
to come through, huh, Ken?
Walmart, Home Depot, a couple of other high profile names. So
Yeah,
quiet
we'll
week,
be
but
watching.
still some noteworthy reports to keep an eye on.
Yeah. Well, Palantir already has hit its earnings out of the way and a really nice reaction to that with a strong gap up in volume, reaction of 20% when the earnings came out. But it looks like it's been quieting down, at least relative to the wild action that this one typically displays, Ken.
Yeah, I mean, I'm just kind of looking at the price action since last week's earnings report. This is a software company, mostly known for their intelligence work with the government, and just really been holding gains after this gap up. So to me, it looks like the decline has been in very light volume. You saw heavy volume roll into the stock when it reported earnings, and now it's just been kind of drifting lower in light volume. So this is the type of price action that you want to see. To me, it does set the stage for potentially higher prices. It's gonna need the confirmed uptrend to keep going here. So we'll hold out hope that this tradable rally into the end of the year will stay intact, and that could help Palantir. But again, fundamentals are in check here, and technical picture looks pretty good too.
Totally agree. And we'll cap things off with a look at PHM PulteGroup. Man, home builders really were the beneficiaries last week when we started seeing those treasury yields come off. And so the fact that today's decline was less than 1% and in light volume, Ken, in the face of rising yields, that seems pretty interesting here.
Yeah, I think the group is definitely worth paying attention to. The issue here is, when you look at the annual estimates for PulteGroup, it's really nothing to write home about. Even the growth in recent quarters, it has been slowing. So the home building group is so cyclical. These
Mhm.
stocks will start to rally when fundamentals may look like they're worsening. So I think if PulteGroup after that bullish accumulation week last week, if it can form a handle here, home builders could have more left here. It would be a very counterintuitive move, with all the concerns about the economy and a slowdown. But you want to pay attention to the technicals of the home builders here, because this is another
Mhm.
setup that's worth watching. Similar to Palantir, if you go back to the daily chart, it is good volume on the way up, heavy volume showing signs of accumulation, and then the recent decline has just been drifting lower, holding above support levels. So this also looks like a pretty good handle forming here. So lots of good setups out there, and November and December seasonally pretty good months for the market. Volume tends to dry up a little bit. More or less, but we did see heavy volume today. So kind of a rough day of selling today in the broad market, but after 8-9 up days in a row, it was bound to come in. So bottom line, still seeing a lot of good setups out there, and not ready to give up on this rally just yet.
Right. And I do agree that it is interesting about these home builders. It seems like they're really going to need to thread the needle. And if we continue to see interest rates at elevated levels until it starts to feel to consumers like the new normal, it seems like existing home sales, that is really what is going to suffer because sellers aren't going to want to trade up their their mortgages for a higher monthly payment. So for folks who are looking for a new home, maybe a new build is going to be the easier way for them, and we do have a constraint on the supply side, so we'll have to
Mhm.
see. Yeah.
Yeah, that's all exactly right. But and very much true. Home builders, a lot of people are holding on to their homes. They're remodeling, with interest rates. They came down. There's still kind of an uncertain rate environment. But again, sometimes the home builders moves can be counterintuitive. We just want to recognize improving technicals when we see them. And I think Pulte's one of the better home builders out there. It's a big group, but definitely fairly consistent track record of bottom line and top line growth in recent quarters, and a good technical setup as well.
Yeah, definitely. Okay, well, thank you for that, Ken. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live and hope you join us. Investors.com/IBD Live for all those details. We're going to be joined by Dan Fitzpatrick of StockMarketMentor.com. So we will see you there, and we'll also see you right back here tomorrow at the close.